Good morning, it's Jeff Christian from CPM Group in New York. It's about 11:35 on Tuesday, the 31st of August, the last day of August. I wanted to talk today, actually speak to a response of one of the comments that we got by email in response to last Friday's email on the imminent economic collapse that some people say is imminent, but we have for 50 years been waiting for it to transpire. We got this email and it was very good. First off, the lady BM thanked me for referring to the book High Conflict, and I'm working through the book right now. It's an extremely helpful, informative book, especially in this day and age, as BM says, when we're seeing so much of the world divided into us and them binary paradigms. And that book speaks to that. It's funny because, 15 years ago or so, I got involved with the Silver Summits, which were occurring in Idaho. And the first time I went, the first question that someone asked me was, I don't know what to make believe about you, because everything you say is diametrically opposed to what most people believe about the world and conspiracies and gold and silver. And I'm wondering if you're like a Fed official sent out here to gaslight us. And I said, well, first off, I don't care what you believe. You should never invest on what you believe, only in what you know. The second thing is you're wrong. I happen to be representing what at the time, 2004 or 5 or 6 or whatever it was, represents more than 90% of the world and 90% of the people who buy precious metals in North America. And you are the outliers. You are the guns and bunker conspiracy theories. There's some group of people probably looking a lot like Jeff Christian. I had a big beard and dark glasses back then, and a dark suit and a white shirt. Who are manipulating the world to my worst conditions. And that's the minority. Fast forward to 2021, and some estimates are that perhaps 50, 60% of the United States population, adult population, now factors into those kinds of conspiracy theories, either left or right. Maybe it's 30%, or maybe it's 50% or 60%, but the world has become much more binary and much more adversarial. And the idea of having the capacity, as BM says here, to sit down and have a conversation with someone on the other side of the spectrum, when I get to have that, I sometimes break down in tears of joy because it's so rare. So yes, thank you, BM, for the compliments. Now, the other thing that BM talked about was listening to CPM Group, reading some of our work and such. We are not as concerned about an economic collapse as are the permapools. And that's true. But you have to distinguish between the permabulls who invest in gold and the permabulls who sell gold to investors. They're two quite distinct tribes. The former are oftentimes people who have worked very hard. Some of them have done well for themselves, some of them have not. And they look at the world and they're very much concerned about the state of the world. And everything's complex. When I was a kid, I could take the carburetor of my first car apart and put it back, clean it and put it back together just using logic. Now, I can't even find the carburetor. It probably doesn't even exist. It's been replaced by a fuel injection system. The whole world is much more complex than it used to be, including the economic system and the financial system. And that leads to a sense of sometimes helplessness and confusion. You really don't know what's going on there. It's much more complex. We have had companies say to us, hey, what should the gold price be if the money supply was backed by gold? You say, well, okay, first off, you're talking about M1, M2, or M3, MZM nowadays, broad money. Are you talking about US money supply? Or are you talking about the OECD money supply? Or are you talking about global money supply? Yeah, the old adage or joke about me that I take simple questions and make them into complex answers. It's true. It's a very complex issue. And it's interesting because if you look at M1, M2, M3, under different things, and then are you using 100% gold cover, or are you using the 40% gold cover, which seems to have been the basis of most gold standards, at least since the 14th century. I don't need to have 100% of my currency in circulation in gold, backed by gold. I have to have 40% in case there's a run on the bank. So you start looking at that and all of a sudden you say, okay, so the gold price related to money supply should be somewhere between $400 and $10,000. Yeah, very complex issues. And that complexity confounds people. And when they look at the world and the state of the world and all of the problems that exist there, they get very much concerned. And when they get concerned, they start making themselves vulnerable to the permabulls who sell them gold based on fear. These are just a few of the recent imminent economic collapse headlines that I pulled off of the internet this morning. And you know, it took me probably 10 minutes to find these. I won't bore you with all of them. I did highlight a few of the ones. Everything is collapsing now. I'll show you some charts because that's really what I'm going to do. Adrift in a sea of inflation. Show you some inflation charts. Banks to seize your money. It's already too late. Hey, things are collapsing. You know, haven't you seen this? You know, I forgot to put in a stock market chart. But the stock market's collapsing. The stock market is crashing. It's already crashing. No, the stock market is at record highs. It's at record highs for really bad reasons that cause a lot of concerns, but it's at record highs. It hasn't collapsed yet. Right? So the planned economic collapse, and that goes to that paranoia. Let's feed the paranoia. There's some group of West Coast and East Coast elitists who are trying to impoverish the world. Actually, they're trying to make the world good because just like KFC needs people to stay alive so they can eat greasy chicken, people who make a lot of money in the financial market need other people to be in there slaving for the Yankee dollar so that they can bilk them. So it's very important there, but you've got this enormous range of fear. And there's another point that's really great, and it goes back to that book, High Conflict. This is hubris exemplified. I didn't include it, but several of the headlines I found today were, they just don't understand. Even as they, whoever they are, have been right for the past 50 years, and you have been wrong in your constant predictions about the imminent collapse of the dollar, the financial markets, the bond market, the stock market, the global economic system, everything. Even as you've been wrong and they've been right for half a century, you sit there and say, they just don't understand. Maybe they do understand, and that's why they've been right and you've been wrong. Maybe you're the one that doesn't understand, but you have to have that dialogue that I've talked about in the past, an open, honest, intelligent, objective dialogue. And you have to be willing to say, hey, I was wrong. I was talking to my wife yesterday and this morning, and I talked about the time that we went to see an older 80-something jazz singer in a nightclub in New York. And I said, I thought it was Ethel Waters. And she said, no, it wasn't Ethel Waters. I said, oh, I think it was Ethel Waters. She goes, no, I don't think it was Ethel Waters. So I looked it up, and Ethel Waters had died about a year or two before we had gone to that nightclub. So it wasn't Ethel Waters. But being who I am, I admitted I was wrong. I imagine, you know, Mike Maloney says, no, they revived her for it, you know, but that's not it. It's hubris exemplified. And then you have to go back to those two groups of permabulls. The permabulls who sell gold to investors, you know, and the permabulls who invest in gold. At what point do the people who are permabulls who invest in gold say, wait a minute, Mike, Peter, Mark, Jim, whomever, You've been wrong for half a century. Or if you haven't been in the market that long, 20 years, 10 years, 15 years, I just can't afford to keep listening to you and taking your investment advice. So let's talk a little bit about the imminent economic collapse. I've heard that the economy is collapsing. We just had a really deep recession by modern post-World War II standards, and we've come zooming out of it. So no economic collapse there. And in fact, you saw this chart a week or two ago in one of my presentations. If you compare even the sharp economic collapse that we saw in 2020 to that which came prior to World War II, the Great Depression and the constant depressions in the 1870s, 1880s, 1890s, it's been relatively calm. Not to belittle the pain. CPM Group was the first to say there are a number of problems that are out there. But the point that we keep making is this is not the end, and this is not the collapse. There are economic problems. There's going to be recessions. There's going to be financial crises. There's going to be volatile markets. There's going to be, in the long term, over the next several decades, a change in the international currency system. But it's not an imminent collapse that would cause you to go off and buy gold and silver at record high prices and pay enormous premiums higher than you can get if you actually do your shopping. The dollar's not collapsing. It's fallen from its high in 2019, but it's still in that range that's held since 2015, and it's still significantly higher than the range it was in the range from 2004 to 2015. The dollar's not collapsing. And in fact, you can make a very good argument if you look at long-term international currency regime systems that the dollar has the capacity, if the US government had the political will to make it happen, to stay the reserve currency of the de facto reserve currency of choice for a long, long time. Let's see. Treasury rates have not skyrocketed. They're at historically low levels. They've risen off of the base that we saw last year during the economic lockdown. And this chart's a little bit dated. It's from a presentation I gave earlier in August. In the first week of August, the interest rates came back down more sharply and then they're back up, although they're still like 1.31 the last time I looked yesterday. So they're still very low. No sharp rise in interest rates, and real interest rates remain extremely low and are likely to. And again, I have to point it out, we've had real interest rates very low for a long period of time. And these are 10-year bonds. If you look at the bills, T-bills have had negative rates since around 2008, 2009. And the Fed, Jerome Powell, the chairman, said that we may have negative T-bill rates for another decade. People say, oh my God, a decade of negative real interest rates. That's astounding. Yes, especially since it's coming after more than a decade that we've already had it. In other words, what he's saying is the status quo that has existed since the global financial crisis is likely to persist for the next decade. And as we go back to, if we go back to that economic GDP figure, this is what happened economically in that period of negative interest rates. Not exactly negative for real economic growth. Inflation fears are real. A lot of people are saying they're transitory. We agree that most of them are transitory. We've been saying for more than a decade that the long-term view is that deflation is a much bigger concern. We just aren't seeing signs of persistent inflation, and we're seeing the economic factors that fuel inflation or deflation actually pointing more to deflation. Surplus labor that's growing worse, surplus manufacturing capacity, surplus retail capacity, structural changes in manufacturing, retail, and service provision, surplus commercial real estate. The world probably is much more at risk of deflation than it is of inflation. And my final chart is the Fed balance sheet. The Fed has more ammunition left than we left in Afghanistan last month or this month. The reality is that the Fed, which operates as a bank, has the lending capacity. People say, oh my God, prior to the global financial crisis, the Fed had less than $1 trillion on its balance sheet. Now it's got about $8.3 trillion. It's out of ammunition. How much more can it do? Well, the answer is right now about $83 trillion more. Not saying that it would, but the Fed has plenty of ammunition. So you start looking at the world, and we're not in an economic recession. We're coming out of it. We're now in an expansion phase in China and the United States. Inflation has picked up, but even if you say, oh no, this is permanent inflation, it's a fraction of what it was in the 70s. And even, the 1980s, after Paul Volcker squeezed inflation out of the system, we deregulated interest rates, we deregulated the lending markets, we deregulated a lot of other things, which led to a period of lower inflation. So even if you grant this as a permanent increase, it's still not that high. It's problematic, but it's probably not going to stay. So we have an economy that actually is in pretty good shape. And the next time we get into a problem, there's been a lot learned over the last 50 years by monetary authorities, not only in the United States, but on a global basis, to cause them to take whatever steps are necessary to help the world and the citizens of the world get out of that recession and global financial crisis. We have, I forgot to mention it at the beginning. They told me I should mention it, but I forgot. We have an open forum tomorrow at 11 o'clock Eastern time. If you're a client of CPM Group, including if you're a retail investor client, you can come in. I don't have a formal presentation. I don't have slides and charts. A couple people have already sent us questions and topics they'd like to talk about. And for an hour, it's an open forum. It's an open discussion where people can ask us questions and we'll answer them as best as we can, and we'll provide insights, not only on the overall economy, but also on gold and silver. You'll notice I've been talking about the economy here. The implications are, as we've been saying for years now, there are a lot of problems there. They have to be dealt with. They're probably not going to lead to a collapse of the dollar or the stock market or Western civilization as we know it, but they are very serious issues and they need to be dealt with, and they need to be dealt with honestly by politicians and policymakers who are qualified to do that. And in that kind of environment, we expect investors to continue to shift some of their assets, a very small amount of their assets on a global basis, into gold and silver. And that's probably going to lead to modestly higher prices over the next year or two. And then when the next recession hits, when the next global financial crisis hits, when the US invades its next country, whatever happens, some set of factors trigger a spasm in which investors buy more gold and silver. If they bought 40 million ounces last year, maybe they buy 50 million ounces in the next spasm, the next recession, and that causes gold prices to rise to record levels. We don't see that happening in 2021 or 2022. It can happen anytime. Our expectation is that it probably doesn't happen until 2023, 2024. And at that point, we expect gold and silver prices to rise to record levels. Not $10,000 gold, not $1,500 silver, not even $100 silver, but record levels. And then things will get better and the prices will come down as investors back away from that wall of fear. And the perma bulls who want you to be fearful will continue to say, don't you understand this is the end of the world as we know it. On that happy note, have a good day. We'll come to you again on Friday for the public videos, and we have this open forum tomorrow. If you aren't a retail investor or a non-retail investor, if you're not a client of ours and you want to plug into that, this is a great time to sign up into one of our retail investor programs. And that gives you the right to come on there and say, Jeff, you ignorant fool, don't you understand the world's coming to an end and this is why? And we're sorry you don't believe it. But that's your opportunity. I'll talk to you later, probably Friday.